right, all you devils. How we doing today? Let's see, 19th of December, and per some of the comments, and I was looking for feedback yesterday. You guys were asking for, a start to finish evaluation of how I would go after looking for a new FX trade. So I thought I would just take you through the process here, and this is relatively straightforward. It's not complicated, but a few things here to note. So now this, I've got here our 8-pair strength indicator, and I've shown this many times before, but if you're either a new member, if you're not familiar with this, just send me a DM. I'll send you a link to it. So the reason I like this, and there are a lot of variations of this. I mean, you can get this kind of currency strength meters. You should Google it. There's hundreds of them. Right? There's many of them for MT4. This one, of course, is the nice version for TradingView. But I like these because of the way it visually represents, rather than a bar chart or a histogram. I like that I can see the history. So, of course, with FX, the first fork in the road, the first decision you have to make in your decision tree of how you're going to approach FX is the time frame you're going to trade on. Now, most of the stuff that I've shown you here is for longer time frame because it's very consistent with the broader parameters of what we're teaching, which is the combination of Elliott Wave, market geometry, and the fib swing relationships. So with that being the foundation here and consistent with the methodology that we're teaching here, my advice has always been 4 hours and above. That's where the Elliott Wave will be more clear to you. You're removed a bit from the daily noise and chop that is so pervasive in FX from the last report, the last bit of data that causes the market to move within the shorter term time frame. So you've got to make a decision. Now, we have not done a lot of training on the shorter term things that are taking advantage of market maker patterns and some of the things that I've just kind of teased a little bit lately. Now, we will be doing some detailed training on that after the first of the year as we roll out. Well, it looks like right now it'll be towards the end of January where we roll out what we're calling Trade Devils University 2.0. So that will be a whole section of training for those of you that have the time and the ability to trade off of a 15-minute and a 1 hour in the FX market. For those, now of course that requires you to be really kind of in front of your screen for a good at least 3-4 hours a day. If you don't have that flexibility, you're working a job and you're trading, on your off hours or in the mornings and evenings, this is a much more manageable way to approach it. But you have, in taking that longer term view of it, you have to approach the market here with a longer time horizon in terms of entry, exit, trade management. So we're looking for much bigger swings here, much bigger moves. We're trying to get involved in trends that can last for weeks, if not months, if not years, right? You guys have seen me do weekly and 3-day charts of trends that go on for 6, 7, 8 years. So I make that distinction because we're going to focus here on the daily. And then, as I mentioned here, as we get into the new year, we'll get into some of the shorter term stuff here. All right, so that said, so let me just kind of draw your eye. As we sit here on the hard right edge here, we can see the obvious extremes. Right? What we're looking for are the extremes. So as we sit here looking at it, we can see the dollar and the yen are moving almost in tandem here. But our extreme here is with the New Zealand dollar. So I've got two candidates here, just looking at the assumption being that there's a reversion to the mean. So the New Zealand dollar is very hot. The dollar and the yen are weak. And you can see we've just had a cross here of the Swiss and the pound. But so, I'm just kind of going through, let's keep it easy and simple. What's the most obvious set of pairs? Well, New Zealand to the dollar or the yen. But before we go over and look at those charts, I want you to look at this. So this is this is the last time New Zealand was up in this range here. So I'm going back to, this is that's November of 18. Now, just put your eye just exclusively on this light blue line here and look how we move from one extreme down to the lower extreme, back to the upper extreme, back to the lower extreme. Do you see that it's just a constant? And now do the same thing with your eye for the red line, which is the yen. So we're moving up here. Now we get to an extreme. Now it takes a while. We're back to extreme again, but then we go all the way back down. So one way you can look at this here, I've highlighted the 20s. It's when we get up towards the 50s. So an easy way to approach this would be just take something that's easy. You can see through it here and just wick off here. I'm just using a box here. This is the 20 to the 20. In the middle here, I'm looking for crosses that are close to zero because I have the potential for some, well, look here. So the dollar, here's the dollar and the New Zealand crossing at the zero line. Yeah, we get a little pump here where they're both going the same direction, but then the dollar goes down, the New Zealand goes up. Right, same thing with the yen. Here's the yen and the dollar. Now they're moving in tandem, right together with each other. So who's moving the opposite direction? So you're looking for those polar opposites because the expectation is we don't stay there, right? Look here. So here's the yen. Last time we're up here. Now look where we are in the yen. Right, here's you can almost see like here's the move, here's the retracement, here's the next move, here's the retracement. We retrace back to zero. Now we're back down to the extreme. Now we're not all the way to 50 here, but look how we've taken the New Zealand dollar from deeply oversold here, well, at an extreme here relative towards zero. Right, you can see we don't stay here. Right, we don't stay here for long. And now this is a daily chart here. Right, so here's the Swiss and yen moving from high to low. You get the idea. And now you can, with this indicator, you can remove the other pairs if you want to, right? So if you just wanted to look at New Zealand relative to the dollar and the yen, you can remove the others. But it's just as easy to come over here and look at this. Okay, where are my extremes, right? The anticipation is the yen. Pardon me. The New Zealand will start to retrace towards zero, and the dollar and the yen will start to move towards zero, and this process here, potentially retraces. Now, of course, one scenario is we come towards zero and then we bounce again, right? You can see that there are times where that happens. But this is where we start. This is enough to say, all right, let's go look at it, right? Let's see if there's anything there technically that would be consistent with an anticipation of the New Zealand moving back towards zero. Now, of course, we could move higher, right? You can see we have these little moments here where we get weak and then we'll go. So this certainly, the potential here is for this could certainly go higher and get back up here over 50. We could do that before heading back towards zero or eventually going down towards the lower extreme. Right, so we're not at the absolute peak here. Like this was perfect, where we had the extreme here in the yen and the extreme in the New Zealand, and then look what happens. Right, they reverse positions. Right, see. So it's just a good visual way to say, all right, if I'm hunting for a new trade and I'm looking for something that's setting up, well, this is a reasonable place to start. Okay, now once you've got the pairs identified, the very next thing to do before you even bring up the chart, you got to go look at what the report schedule looks like, right? Do we have any market moving high impact, i.e. red here, over on Forex Factory, which again, this is very, very standard operation here, right? We've been through this before. So here we are sitting on December, the 19th, and I need to see, do I have anything coming up in the immediate term that's going to affect either the New Zealand, we come back here, right? So we're looking for New Zealand, dollar, yen, right? What potentially do we have here that could affect those? Well, look here at the yen, we've got, here's Thursday the 19th. So moving forward, I was surprised, I knew I'd looked here, there wasn't anything in the yen. So here's today, right? Now we're going into the holidays, right, where nothing happens here. So note that, right? So all the more to be thinking long term, because you don't want to get, there is no data here. So we have a big gap of news. Right? Good time to be entering the market. So right now, as I look through the end of the week, now coming into Monday, I've got a whole bunch of things, right? As we go into the new year, the first week of January, I've got all this high impact news that could affect the dollar. Right? But nothing to affect the New Zealand, nothing to affect the yen. That data has already come and gone. This very market moving potential impact here, so I'm less interested in the dollar. Now, that said, I still want to take a look at it, or see which one looks better. So I'm going to come over here to where here I've got both of these here. We'll look at them individually. So first thing, let's go look at the dollar, the New Zealand to the dollar, because that's just as right, that's just as extreme here. Here's the New Zealand, here's the dollar, right? So it's almost, you certainly would want to look at both of them. Right, so let's go back here. So this is New Zealand to the dollar. right, so you want to get out here and get a longer term view of it here. So I really almost have to go to the weekly. So looking out here, here I can see my well, here's something impulsive. I've retraced to the 50. I've come down. Looks like, again, I'm out here on a weekly. Possibly there's your front run on the target. That's bigger than you think here. It's close enough that could be your front run, right? So, and then coming off of this, now I got to go down. Let's go to an 8 hour here. See how that looks. All right, what do we have here? It looks to me like we've got an ABC going in, but this does not look like it's done. First, if I look at this, within this channel, now we've had a little throw over here on the channel. If I just look at the A, the B, and the C, well, here's the 100. It looks 1272. This is very common in FX. You'll see this a lot. 786 and the 127 138 window. But if I look at the subdivision here, it looks like I've got a diagonal into the A, kind of a choppy little B, and then again it looks like 1 2. I get a clear impulsive here within the third. Now again, I'm out here on an 8 hour. Maybe it's easier to see on a 3. Right, so here within, if this is my 2, if this is my 1 2, well, I get a clear impulse. The subdivision is very clear. For the third here, ABC into a 4, looks to me like there's reasonable chance that this has got another leg higher here. And I know that I've got market moving data coming into the dollar. Oh, shit. In the very near term, right? So do I, of the two, just that alone, may influence the decision making here because we have that very high impact news, right? For the first of the week, we've got the employment data, very high impact news that could affect the dollar. So I don't want to be trying to enter somewhere in this range where I could just get stopped out through some volatility. I'd prefer not to. So if this has got one more little leg up here to complete the 5 of this ABC or maybe get to some of these upper targets, I don't like this as much because it's not clear to me that we have a top. It's very reasonable to think this little ABC here is just the 4 before we kick up for the 5. All right, so this, I want to keep an eye on this, but it's not given that count here in the structure that I can see. I don't like it as much because I can see a very clear path for that to be continuing to move higher. All right, so with that evaluated, not that this this stays on a watch list because the count here is clean. But of my choices, knowing that I can choose between the New Zealand or the yen, I'll go, all right, it's okay, but let's see how the yen looks. Do we look better relative to the yen? All right, so let's go look over here. Now I'm all the way out to a weekly. Now keep in mind, guys, here this is a 10. What is it? No, pardon me. This is an 11-year range we're looking at. 11 years, right? So immediately your time horizon has to be altered radically. We're talking about trades you might be in for years. You have to think of it more like an equity trade. Something you'd stay in for 2-3 years, 2-3 months even. Right? I mean, not something you're going to get in and be out by Friday. That's not what we're doing here. This is longer term, right? So you can see, look at all the chop heading down, right? But a series of lower lows, lower highs, lower lows, lower highs. So I've got something going on here, and it looks like we're just moving in out at this degree. It looks like we're just moving in ABCs. So a couple things I want to look at here before we go down to the hourly, right? So we're not going to make a decision about entry off of a weekly chart per se, but I want to see where I am. Is there a longer term count here that makes sense? Are we technical? What's going on here? All right, so first thing I want to do is just kind of get a feel for, are we trading technically out here, right, at this level? Here in between the 50 and the 618, looks pretty solid. Get right on these here, so blows right through first target. Third, okay, maybe looks like that's an ABC, and it looks like there'd be 2, 3, 4, 5. So there's clearly an impulse in that C. Now again, coming down. All right, pretty easy to spot the 5 there, right? Again, I'm out here on a weekly, right? Not too hard to spot that. All right, perfect. We don't overlap the 1. Do we? No, we don't, right? So we're spared the overlap of the 1. That's just perfect, right? Here's the resistance up here, repeatedly tested. So not too hard, right? To say, okay, I got 5 down. Looks like I go ABC into a 1, 2, 3 quadruple top. Now we're heading down. Now, are we done? Well, again, right, I don't want to make that deduction out here on the weekly because breaking into this subdivision here, well, at this time frame, I'd want to go down to get a little more detail. But there's value to be noted here. So first thing, this impulse, look, we go to just almost get third target here. So I want to look and see, well, something happened here, right? Obviously, this was important to the market, right? Look how many times support, resistance, 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 support. Now we have a break. So something's going on here, right? Do I even need to draw it up? All right, there's 50 to the tick. Right, I mean, you knew that was right. Likely, here. Let's see what else is there. Right? Okay, guys. Now look, we are on a weekly chart, and you hear me say this all the time. Whether we're looking at a 1 minute or a 1 month, 1 week, 1 day, 1 hour, it is exactly the same. Always the same. Right? So you're saying, oh, come on, man, that's not going to be there on a weekly chart. In the New Zealand to the yen, no way. Right? That's I can't, like, that's as precise as it can be. We're 50 to the tick in the middle of the golden zone. Right? Look at the move that comes off there. Right? I mean, that's a way bigger move than you realize. So coming off of that up there, what did we get there? That's 1,300, almost 1,400 pips. These are, but you had to stay into that from 16 to, shit, if you took the first one here, that's almost a year. For 1,300 pips, worth it? Okay, so what can I see here, right? This would have been a little tricky to know here, but now it looks like we got an A, B, C into a B, right? Oh, shit, that thing is sticky. Okay, let's bring you back here. All right, so now you're just kind of going through the process going, well, hey, well, could we be done here? Because we've now broken, note here, we've broken the golden zone from this pivot. So what's going on there? Right, you'd think, look, it looked like maybe it was going to bounce here and we're going to have continued support here, but with that break, well, that's implying that potentially we have more downside here. Now think about what we're trying to do here. We're looking for New Zealand down, yen up, to reversion to the mean. We want these two to head back towards zero. That's the tendency. Again, I'm just looking at what the market typically does. That's all, right? I'm not doing a detailed analysis of the GDP of the New Zealand economy. No, I'm just looking for what does the market typically do? Are there patterns here that we can take advantage of? What happened the last time these two got to these extremes? Right? Now look at us. Right? Just see last time. New Zealand to the yen. Last time. New Zealand to the yen. Last time. Right? New Zealand to the yen. Right? It's just reversion to the mean. Very simple concept. All right, so look here now. Okay, so what else can I learn here? Well, what you would have been anticipating here from hitting this is we're going up there, right? Technically perfect, right? Just perfect confluence. You're thinking we're going up there. Well, shit, I got the median line. I got all this. Well, maybe you'd draw it a little bit differently here, but so you'd probably draw this from here, right? This is the one you'd probably put on. Let's go to original. Right? You're thinking, hey, golden corner, man. I'm all over that. What's the caveat? Always, always, always. What's the caveat? 80% odds we make the median line as long as this pivot holds. Well, first tell was we don't even get close, right? We don't make the median line. So here, let's get this. No, that's not the one I want off. I want this one off. Okay, let's get that one off. All right, so you're here thinking, oh, I got a golden corner. I'm all good. I'm heading up, right? Whichever median line it was, right? Whether we're using the other one, something along those lines. At the very least, you're thinking, oh, I got it. See what's happening. Okay, I'm going to sit tight. I'm going to be in that trade for the next 2 years. Okay, I'm just staying long New Zealand, short the yen. There we go. Boom, technical precision. Love it, right? What happens? Right? Something happens here. Do you want to guess what's there? Do I even need to draw it up? Let's take this one off. All right. What do you think happened there? All right. So you're thinking all the way. Now look here. There's another one here. All right. Again, still out here on the weekly. All right. Looking here. All right. Here's the 50 From here, you're thinking, hey, well, I didn't get that one, but this one looks great. Well, shit, that alone, that's way more money than you realize. Yeah, I know it distorts your eye. Where's my little thing? It distorts your eye here out at the weekly. You're like, well, that doesn't look like it's much. Only 700 pips. That's it. That's all that was there. 700 pips, and we run into a double top. Well, pardon me, a quadruple top. So something's there, right? Do I need to draw it up? Oh, come here. Let's get you off of here. All right. So what happens? Why can't we get any traction? Why are we now failing, right? So here, swing high, swing low, right? All failing. What's the problem? All right, well, you guys know, right? So the first thing you do, you use the dominant, right? You'd pull that up and you go, not quite getting there. Not quite. Now you wonder, well, let's just check the secondary. One, well, that wouldn't have been relevant here. That would have been relevant here. Right, so there's the 50. So okay, Jesus. So here's the 2 to the 3. Right, here's the 4 at the 50. We don't overlap the 1. What do? Right to target. So now there it is, guys. Right on the weekly. Right, what's there? I think you guys are not realizing how profitable these trades can be. Well, there's almost 1,400 pips. Right, and it's right to the look at what a laydown that is. Guys, look, right. So where's the obvious area that's going to be likely to run into some support? A couple of ticks in front of the algo target. And do we do anything fancy here? No. Just length of the 3. Where's the 4? Oh, good. All right. Look, we don't overlap the 1. Right? How nice. Just perfect tick, perfect. Boom, right to target. What happens at target? Shit. Right, what happens at the target, guys? Right, so I don't cherry pick these, right? So the reason I'm here showing you this is because of this, not because I went through all the pairs I could find to look for. Oh man, it took me 4 hours to find that. No, it didn't. It took me about 10 minutes to set the whole thing up. Right? Okay, no problem. Right, so what's happening there? Right, so this one's to Jesus. I can't literally, guys. I can't Photoshop that any better. Okay, in here now. So now we go to this low. So now we look here from golden zone. So do you see what's happening here? This is just a battle between these algos. Right, that's all that's going on there. Golden zone to golden zone. But now I get a break. So something significant has happened here. Well, of course, a break from a secondary pivot means I got to check back here. Now look what's happening here. So you see, so we're just, of course, you do it much faster yourself, but now we put the thing together. I go dominant to dominant. Okay, here's the 50. Oh, lo and behold, look at that. That's to the tick. What do? Right to the next golden zone. Well, now we're coming down. We've broken the 50. So why do we stop here? Why? Right? It's not tick perfect. Why are we stopping there? Well, of course, you could look left and say, all right, there's a bunch of shit over here, right? It looks like a bunch of chop here. I can kind of, all right, yeah, we got through, but it wasn't by much, and we bumped into all of this prior structure here, and look, we're getting a little bounce. But that's not enough for me. I need something precise here. Well, of course, the first thing I'm going to do is start looking for geometry. All right, so I'm just going to grab my pivot high. All right, what are the obvious things? Get right on it. Am I on that? I should be right to the tick on it. Yeah, I'm close. Right. So you might look at that and go, is that the C? Could be. Right? Certainly it could be. But now we got to think about that and go, wait a minute, is the New Zealand going to continue to go? Are we going to keep going up here to get over 50 here? Is the yen going to go down here? Or is it more probable that these two over time are going to head to zero? Let's go back here and look. Right? So if they're going to head towards zero, that means the New Zealand is getting, so here's New Zealand yen. I don't know why that's saying euro yen. Interesting. But this is, trust me, this is the New Zealand yen. So as we come down, if New Zealand's going to get weaker, right? Yen's going to get stronger. That implies a push down. What's right there? What happened the last time we were here, right? Algo target, boom. We come down here. I've got algo target and my golden zone sitting at the median line. Right? Is this median line? Does this set of geometry frame the market pretty well? Yeah, it didn't tick it. I'm not dying, I'm close enough here. Right. So here's what I'm looking for right now. So you look at that and you go, well, shit, man. So that doesn't, what's there? How much is that? Is it worth doing all this hassle to struggle to get that? What's there? That's 930 pips. Guys, we're still out on the weekly. Right? Is this isn't hard. This isn't, holy shit, the complexity of all the central bank policy shifts and changes and report. No, this is not, it's not that hard. It's not that, no, I don't want to mislead you here. Not that FX trading is easy. Oh God, right? Let's be clear, right? One of the hardest things to do. But this is a reasonable way to approach it. So from here, this is what I'm looking for. Just that little move. Okay, would that make sense? Would that make sense? Yen to move higher, the New Zealand to go. So all I'm looking for is this pattern, right? Of look, pattern. Are we going to repeat? Does the count support it? Well, okay, maybe, right? So I can see a pathway, and I'm thinking ABC to the golden zone. Okay, if we broke the 50 here, if that's going to be a little push higher and I'm going to retrace, well, I'm going to go down to some smaller time frames and see how likely it is because I'm after 900 pips here. All right, let's go from the weekly. Well, here, let me do daily first. All right, so we can see here that we're running into something, some structure here. So multiple, right? Support, little pop through, but seems to be we're running into some resistance there. Right, so we can, we got, here's our target down here. Here's what we're after, right here, our 900 pip move. Well, what do I see, right? So are we with trend, right? Vegas wave pointing down. What do I got here? A relentless series of lower lows and lower highs. Here's the only time we get something that looks impulsive. So it looks like it's an ABC, and then look at the collapse that follows. Lower lows, lower highs, lower lows. Now, something has changed here a little bit. Now I'm on the daily. So something has changed here, and I've run into some structure. So, of course, I want to consider this pivot relative to what's come before it. So let's start with the obvious. What's the most recent dominant pivot right here? All right, so what do? We just tag the 50. But I'm going to have some secondary pivots as well, so let's see if there's any confluence. So from here to here, what do I get? Right, do you see we're right at the golden zone? I know it gets hard to see there. Let me open that up a little bit. So from this pivot, let's get it tightened down. Get you tightened down here. Okay, so we've just come up. Here's the 50. So we have this overlap here where we have all of this confluence here to the left, all of this prior structure. So if I really bring it down here, it's damn near within a tick or two, right? So we've just come shy. We're just shy now of getting into the golden zone from the secondary pivot from this. So I'm looking at this going, well, does that look like, looks like this could be 1, 2, looks like I might have a diagonal going. So let's think about that. Could this be that I've just got a 1, 2, ABC into a 3, ABC into a 4. I'm going down for the 5. I'm pretty reasonable, right? So no, look at the, you see the confluence down here? Right, so do you see I've got a golden zone and two algo targets down here on top of each other right at the median line. So right, that 900 pip trade is available to us. Now again, nothing's guaranteed, right? This could pop right up here. We've got higher golden zone here, right, from the dominant. But if the structure is going to stay consistent here, we don't want this to go too much further, right? So the length of the 4, pardon me. Let's look at it both ways. Traditionally, so we'd look for, in a diagonal, we'd look for something technical between the start of the 1, the pivot of the 3. You guys have heard me say that 1,000 times, right? So could this be a diagonal? I got a nice little ABC here, and I'm at the 50 at structure. But I throw the other one in here just to see, right? Because an algo doesn't give a shit about an Elliott count, right? So here we go. All right, so I can put that in there and go, is there more confluence there? Reasonable spot to be looking to enter the market. But if I'm going to enter here, I want to give this a little room. So when we go down to the smaller time frame, because there's a chance this might have another kick, we could there's a range up here that this could get. We could get up and go a little bit higher, right? We got to see when we get down to the smaller time frame. But we're not looking for much higher here because the structure of the diagonal starts to break down. Right now, just looking at here, so if I take the length of the 1 projected from the 2, Here again, so there you see, this is very common in FX, the 1272, right? And then, so let's look at the internal. Right? I know I'm going long here, guys, but hopefully this is helpful. Right? So here's the 100. So we get a little confluence down here. Right? You see, as we come into it, I've got a little confluence point. So I get the wick down. So do you see the body holds the 100. This wick comes down, and that's classic FX, right? That's market makers need to accumulate longs before they take it up. So those kind of spikes like that, that's all that's happening. You see it all the time in FX because of the way the market makers have to trade and accumulate longs so they want to take it higher, right? So you can actually see here, this is the phase that they go through, right? So here's the second. Yeah, we'll get into that, right, when we do our shorter term trading, but this is a very common pattern. That's the wicking down to accumulate the longs before they rip it up, right? Same thing up here. Potentially now they're accumulating shorts before they take it down. All right, so all of this looks very good in the context of a finishing diagonal, and I want New Zealand down and yen up. Right? New Zealand down, yen up. Does that make sense with what I've got over here? Well, let's go down even to a little bit lower time frame. I know this gets really crowded and hard to see. Here, let's take all this off just to make it easier to see. Hopefully you guys can recreate this. Right? See, I know this is hard to do, and we're already 30 minutes in, but right, I mean so you could look at this and say 1, 2, 3, ABC into the 4, right to the 50. That's my target. Well, am I done here? Because this sure looks like I could have an ABC here. AB, could I be done here? Let's go down a degree. All right, am I done? Well, I'm on a daily still, right? I want to go down to some lower time frames. Let's go to the 3 hour. I like the 3 hour because everybody else is using the 4 hour. Okay, there we go. So I'm looking at this going, all right, right, if this is my A, we got to redo these a little bit. We changed time frames. That's the B. All right, so right, coming from here, that looks like 4. This is the ABC. So if I'm kind of working backwards, right, does it look like I could be done here? Well, I could be. Let's just move this off, right? Let's not make any assumptions, right? This is where we're looking for it. But right now I got a little ABC, and I got a trend line here supporting this. So if I'm thinking about the structure of this C wave, well, if this is my 3, 4, and I've gone A, B, C into the B, that looks like that's your one. So you're gonna have to go with a skinny 2. Come here. So it looks like you're stuck with 1, 2, right? 1, 2, 3. Well, God, it's tough to call that anything. Well, let's go 3, possibly 4, possibly 5 here. So this will have to go up a degree here. Let's change the color. Let's go sub. Right, it's important to do these, guys. I promise you, you'll get so lost in which degree is which here. So changing colors, changing degree, always a good idea. So right now, looking at this, well, if that's 1, 2, how's my distance here? How's my fib swing relationship? If that's all I've got is the 1, 2, well then here again is the 1, 2, 7, 2. We're long enough, so if this is 1 in some sort of an ABC into that shallow 2, okay, I can live with it, right? So it's not the best looking. The subdivision here is not great here, but so it could be. Well, so possibly, right? We're at a 3 hour. Since that's a little 3-wave structure, I had a reaction. So I got 2 possibilities. One is that's a little 4 before we kick one more time, or I've got a deeper retracement coming because that would be just a WX and we go into a Y. So let's just look at that, right? Same idea here. So then we're just going to go down to a slightly smaller time frame. So I go to the 1 hour. Now, can I build a trade around the 1 hour? Well, this looks like ABC, right? And I can put a little, all right, 1, 2, 3, 1, 2, 3, 4, 5 of the 3 ABC, possibly of the 4, but it's very shallow. So if this is my 2 and that's my 3, well, I make the 23. So is that 1, 2? Well, I mean, so the alternate, of course, is that we'd have a WXY here. That's not 90%, so it's unlikely a flat. So it looks like the alternate you'd have to prepare for would be a WXY. So it looks like possibly WXY could bring you down here for a deeper 4. So I would start to put some pieces together. Okay, so this little trend line here seems to be, all right, we've got multiple touches here. So before we were looking to get short, you'd want to see that break. So if this is the 3 and this is a W, well, I got to pay attention to what kind of distance I'm getting here, right? So where I'd be looking for that. So this here would be the 1272. Here would be some structure I'd want to pay attention to here. So if this is going to come down, right? So really, what you're looking for is some confirmation that I have a good top here, but I can't see it yet because this could be ABC into the 4, and this could be 1, 2. Now that's classic. So what are they doing here, right? They're running the stops here. What's the time of night? Well, that's probably Asia session. So they're accumulating the shorts before they move that down. It's likely all they're doing here, right? So you can see what happened here. People put their stops right there. They take it up, get all those shorts accumulated, then they take it down, right? So the people that sold here, where are they going to put their stops? Right? Do you see what they do here? Right? So if you sold that, your stop's sitting right over that. That's all they're doing right there. Go grab those stops and take it down. All right, so with that said, you're a little bit in a box here. So you kind of got to watch for a possible break here. Now, because we're trading out on this higher time frame, I'm not trying to get the tick high. I'm just trying to get into the market here where I'm less likely to have something come down and then blow me up here. Because I'm trying to get into this trade here, but I'm looking to hold it for what could be certainly weeks, if not months. Thinking back to, well, how long could that actually take to correct? Well, how long did this? We were this low again in at the end of August, end of summer, right? So damn near 6 months to get there. Here, right? Almost 6 months to get there. So this is a multi-month trade. So I'm not terribly concerned about getting the tick high here. I just want to get positioned into the market here, have enough clearance of my stop, and be able to do it in like, okay, I can make sense of where the Elliott count is. So it's unclear here. So yeah, you could take a run on this on the break. If we come down here, we start to break the trend line. But then, right, if we break here, that's a possible. You take a little first bite at it here. But what we're trying to do is, if there's any sort of retrace here, you may want to do a little bit of laddering here. So now I'm on an hourly, so this distance here is not huge. So just to put it in context, right? If it were to come back up here, well, there's 40, 50 pips. Right? You may not want to give it that much. You may not want to stay short, going underwater on 50 pips. Again, depends account size, risk tolerance, all those variables are important here. So because I don't have a 1, 2, 3, 4, I don't have a motive wave starting me down telling me, oh, top's probably in, it's still a little suspect here as to whether or not we've got a hard top. So I need something to kind of trigger it. So perhaps a break of this trend line, perhaps a break of this channel. Right, but so the whole time we're kind of watching this going, all right, well, if that's a 1, 2, and this is my 3 and this is my 4, I got to be conscious of the real possibility that there's one more kick in that. All right, so something along these lines here, this would be from the 2 to the 3. 2 to the 3, right? Here's the 38, right? I've got a cluster of prior price action here, right? So I've got this high volume node here where all of this trading took place. So doing something like that, if we did it like that, right? Something along these lines to come back here, that's right. So then I'm going to need to be looking for what's happening over here, right? Because that would imply that this is going to kick a little higher and this is going to kick a little lower. Well, has it done that before? Sure, right? We could see that. We could kick a little bit higher. So you have to kind of put that all together and go, does that fit with what I'm anticipating here in terms of an Elliott count and where I'm likely to get reactions in the market? We certainly could go up higher here and get some of these higher targets, right? That would finish us out. That would give us the C here if we were to come up into that 5, right, up towards that target. Okay, so then you got to pull back and go, okay, wait a minute. Where does that put the whole thing? So if this is 1, 2, 3, and I'm working through my 4, well, I'd like it even better if I got this move up here, because then I'm clear on the Elliott count. And of course, we can do some. Shit, I had a bunch of things on here. Let me clean this up here a little. Damn, I did not mean this to go that long, but looks like I'm stuck with it. All right, at 39 minutes. All right, so hopefully you guys get something out of this. All right, so here we are at the 50. These things are identified. I had a few things here we would we could start adding if I can find them. Okay, so first let's get that pitchfork on. So you can see part of the reason that I like this here, so I've got a shift pitchfork on here. This is the 200%. Note here the confluence as we hit the potential wave 3 target here as we're on the 200% of that median line. All right, so that's the first one. Then I've got a set of a channel here. Let me pull this down just a bit. So look at the confluence here as I get the 200%. Do you see what's all that's here? I've got the 200% of the shift pitchfork. I've got the channel, the upper parallel, right? Because the channel is drawn from these two pivots. So I get up here, I've got that confluence. Now I could add more to it, right? I've got, well, pardon me, that's coming the other direction. Was that the one I want? Yeah, let's take that one off. And I think that's it, right? I think that's everything I wanted to add on. Okay, so you can see the confluence here. So potentially, though, we've got this little WXY. So I have to be prepared for one more kick higher here because the count is suggesting that, and you could see how this could happen. We could come down here to this upper parallel here, and then one more push up completes the 5, right? So we get the, this is the area that's a little bit, you're a little bit cautious about this because what is that, right? That's just FX chop, right? That's the kind of shit that happens. Oh, you're just trendless here. This is just stop running accumulation. So likely all that's happening here is they're accumulating longs before they run it up again. So that's the shorter term type of thing. So you have to be conscious of that. So this, it just looks like there could be one more kick here. So I'm not ready to short it today, but this is absolutely one that I'm hot for. I want this because if I pull back out and look at where this could go, right, is where we started, I've got a huge downside here. Even though here now on an 8 hour, it doesn't look like it's that big. But you can see, so do you see the potential here that we'd go from one golden zone to the next? Let's see if I can squeeze this up here. So here's what you're potentially looking at. One more kick up to this golden zone with a target now of this golden zone. That's what we're after here. So it's trying to get positioned here, and we don't want the thing to run away from us. So if this is going to start to weaken, and we're going to start, and so for example, we break that trend line, we don't bounce off of the upper parallel, and this starts to go, well now you're going to miss the turn, so you wait for the retrace. Right, but you'd want to see something you'd want to see a motive wave get it started. Right now, I've just got a little ABC. It's not good enough to go, okay, time to get in. Acknowledging all the structure, all the confluence that's right here, but I think it's more likely to be the 3. So I got to see a little bit more. And now, if it starts to come down, then I'd be looking for a retrace. So if we miss the turn for whatever reason, and we start to see if I can do it. Can I do it this way? If we retrace back, now I'm looking, right? Now I'm looking for 4, 5. So I may not make the turn at the top for the 1, but I certainly want to get the 2. Now, of course, there's traffic to get through, right? There's technical confluence here at points here that the market will respond to. So if this is going to come down here and tag the median line in the lower part of the channel, if I miss the turn here and we end up with a motive, well, what a reasonable place to be looking for the retrace, right? 2 to the 3. That's what we're after there. But that could put you into March of next year, right? Is it worth waiting for that? For 900 pips, right? Or if it kicks even higher, just to put it in context, now we're talking, now it's 1,000 pips, right? If it goes up to this golden zone and we get, shit, that thing is annoying, and we get this up here, 1,000 pips, right? Worth waiting for, worth going through all of that, which all started over here. Shit, I did not mean to make that long. All right, there's 43 minutes, guys. Sorry about it. I hope you got something out of that. That's kind of a deep dive here in a long video. I'm sorry about that, but I don't know how to explain it any faster. All right, so hopefully you got something there. It's not so much about this particular trade. It's the process that I hope you learn from. All right, guys. Back to you later.